Good day, ladies and gentlemen. So today I want to teach you what inducement really is. Okay, so inducement is a smart money concept terminology. Okay, it's an ICT terminology. So let's kick off by going to Google and checking what the meaning of inducement is, the dictionary meaning of inducement. Okay, so inducement, you can see it right here. It says a thing that persuades or leads someone to do something. Okay, so it says a thing that persuades or leads someone to do something, and that's exactly what inducement is. Okay, something that persuades you or leads you to take a particular action. So it's more or less like something deceptive. It leads you to take an action, but that action might not be the correct action to actually take. Okay, so in trading terms, the way I would like you to think of it, so it will be easy for you to remember, think of it as a fake out, okay, or a fake movement. All right, so it's basically going to make you think price wants to move in a certain direction, so you jump into the trade thinking it will actually move in that direction, only for price to reverse and move in the opposite direction, hitting your stop loss. Okay, so I'm going to start by giving you some diagrams, then I'll come back to the live charts in order for you to really understand how this works. Let's say you are in an uptrend, you are basically having higher highs and higher lows like this. It gets to a point, price gives you this low right here, which is serving as a support, and at the same time price creates an order block around here. There's another block down there. What an inducement would look like is price is going to come down to break this resistance level that is here. Now breakout traders are going to think that since that resistance level has been broken, definitely price wants to move in a downwards direction, so they take a sell trade from there. All right, so that's where the inducement comes in. They see something on the chart that makes them think, oh, price is moving in a certain direction, only for price to move in another direction. Let me give you this quick tip before I forget. Inducement most times is caused by price trying to go to either a fair value gap or an order block. One of these two, fair value gap, order block, or let's say a demand or supply zone. So price is actually trying to go to one of these zones, so you need to look out to see if you have those zones around. Okay, because that's the main reason why you have that inducement. Breakout traders, they usually wait for a level to get broken so that they can jump in. They will take a sell trade from here thinking price is going to move all the way down and they'll make a lot of profits. Guess what happens? Price comes down to the order block or fair value gap or whatever it is you have there, and does what? Let me change the color so you can see it clearly. Okay, and price gives a massive buy from there, hitting all their stop losses and putting them at losses. Okay, so basically that's how inducement works. You can have it in so many ways. If let me give a scenario for a downtrend. For downtrend, market is giving you lower highs, lower low, lower highs, lower low, then it gives you a low like this. All of a sudden that low gets broken in this direction. You do not know that there is a particular important level here, be it an order block or a fair value gap up there. So because it has broken this level, you feel it's going to be a buy trade. Then you enter a buy trade from here thinking price will move in the upwards direction and give you a reasonable trade. Instead of that, what you find out is that price gets to that fair value gap somewhere here and does what? Gives a massive sell, hitting your stop loss. Okay, so this movement below this structure, closing below above this structure rather, is an inducement, making you think you are going to have a buy scenario, not knowing that price is actually trying to get to an important level like a fair value gap or whatever it is you have, and then reverse from there. So you have to look out for that. Let me give you some examples on the live charts. Okay, I've marked out 2 examples for you so you can understand how it works. Okay, now look at this red line. This red line is serving as supports. It's serving as supports, okay, because price was moving with, let me take this out. All right, price moved up, retraced, move up as if it's giving us an uptrend formation. Then it came down to bounce off of that line. Okay, it bounced off of that line, showing you that that line is actually an important support. So breakout traders will be expecting price to break that line so they can actually enter a sell trade. And guess what? At this point, price broke the line. Can you see that? Price broke and closed below the line, showing you that yes, price wants to move in the downwards direction. So if you take a sell trade, you'll be sorry at that point, because if you scroll to the left, you would notice that you have a fair value gap here. Let me zoom in so you can see it. You have a fair value gap right there, because this first candle, the wick of that first candle does not intersect with the wick of this third candle, and I've marked both out with what's it called, with horizontal blue lines, which you can see. So this is the gap actually, and as you already know, fair value gaps usually attracts price, and price can reverse from there. So now that price has broken this particular level, can you see that level? Price has broken this level. If you take a sell trade, you can see what happened. Price got to the top of the fair value gap and bounced from there. It still came back, tapped into it, bounced from there. So all those times that the price is actually bouncing from there, I believe the traders that took that sell trade would have noticed the fair value gap at that point, and it's already too late because they're already in the market. Price came back, tapped into it, moved up again. Then finally it moved higher to hit whatever stop loss you might have above this level. Okay, so that's basically how inducement works, and it can also work if you have a trend line breakouts traders also. It can also affect you. So I drew out one trend line example right here. So you can see you have an order block. You have an order block right here. You have an order block there. So price will always want to come back to that order block to tap into it and give you a sell trade, which it did right here. Okay, so let's imagine we are not seeing the order block there, and we are only paying attention to this trend line that is here. Price bounce off the trend line here, bounce off the trend line here again, bounce off the trend line here, showing you that yes, this is a good and strong trend line. Then finally it broke out and closed outside or above the trend line. Breakout traders would see it as a good time to do what? To actually buy, thinking the market wants to move up. Those that are patient will wait for a retest of the trend line and enter their buy trade. You know, it's going to make sense. It looks as if it makes sense to them that, oh, price has retested this trend line, so it's time for me to enter my buy trade. But everything is going to end in foolishness if you do not know that there is there is an order block very, very close to your trend line, and that is what price is actually trying to get to. Not as if it's breaking your trend line, it's trying to get to that order block. So if you enter the buy trade, you are on your own, because once it has tapped into the order block, what you are going to have is a sell trade, and that's exactly what happened. It tapped in here, okay, you can see what later happened. Sell trade at the end of the day. Market moved down at the end of the day. So the advice I'm going to give is, if you are not a breakout trader, inducement will rarely catch you. That's the truth. If you're not a breakout trader, this inducement of a thing will rarely give you issues. Okay, but for those that are trend line, support and resistance breakout traders, the advice I can give you is, before you enter any of your trade, even though price has broken out of whatever boundary you have drawn for it, be it a trend line, a support or resistance. Even if price has broken it, don't just enter the trade. Try to look around the charts to see where you have order blocks, where you have fair value gaps, and where you have other supply or demand zones. All right, so that will now inform your entry, whether or not you should enter the trade. And if you must enter the trade, then it implies that you need to take your profits at the other block or before it even gets to the other block. And don't imagine that it's going to go past the other block, because you already know other blocks, fair value gaps, they usually reverse price most times, more often than not. It's just in few occasions that price will go past them and then retest them and move in the opposite in the same direction. Okay, so basically that's the value I have for you today. So if you got any value and you love the video, please subscribe and turn on the notification bell. I'm gonna see you in the next video. Thanks for watching.